Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis methods to Tesla stock over both short and medium term, just a week before the 3-to-1 split. First of all, let us check the weekly chart because we do have a valid and confirmed downtrend over the weekly chart. It's clear that it's forming lower highs, as we can see, as well as lower lows, sometimes with high volatility and long candles shadows, and sometimes with close and long full control sellers candlestick bodies. And we can see here, this is the downtrend line, and here is the down channel line. Of course, you can notice that it is a very wide downtrend with very increased volatility and, of course, very high risk. Now, the stock is within a short-term corrective wave to the upside. It is just moving around a very important support monthly level around $900. Of course, testing this level from the downside is considered as a potential resistance, and testing it from upside is considered a potential support. So for the time being, we can notice that Tesla is testing this level, this significant long-term level, as a resistance. And for sure, we can notice the increased volatility as expected around this level. So keep in mind, $900 level is very important resistance level over the long term, especially coming from the monthly chart. Okay, now we should take a look at short-term details over the daily chart. We can notice that over the daily chart, the corrective wave is well established, forming increasing higher lows as well as higher highs over the very short term. As long as the stock is performing within this short-term channel, it is considered in a continuous correction to the upside. As long as the stock is able to stay within this green upward channel, it is considered relatively bullish over the ultra short term. This bullishness may push the stock towards the major downtrend line coming from the weekly chart, which will be running around the 1,000 psychological level up to $1,050. Okay, this is the expectation, but keep in mind that this positive scenario requires some important conditions. First of all, the stock should never break again below the 900 level, which is considered for now a monthly support, as long as the closing is above that level on daily basis. Of course, on weekly basis will be much better. Secondly, performing within the rising ultra short daily channel upward channel is very important, and performing above this rising green ultra short trend line is our second condition for continuous positivity over the short term. Finally, the ultra short support around 860 is very important because this is coming from the hourly chart, and it formed a bottom around this level, over the ultra short time frame from the 1-hour chart. This bottom was very easily identified on the 1-hour chart, and a break below 860 will have a lot of bearish significance, because it means that the stock broke below the monthly support around $900, and it also broke the ultra short uptrend, and this means that a new impulsive wave is established and or being created, which means that the targets may be initially around the nearest weekly support 765 and maybe lower near the downtrend channel line. Let us translate these levels after the split. I mean, the 900 monthly support, or the monthly significant level, divided by 3 means that after the split, this level will be equal to $300. So $300 will be our monthly support after the split. Secondly, the 860 level, which is considered our safety stop loss level, divided by 3, I think it will be around 255, I think so. Exactly 286. So the 860 will be 286. This is our stop loss level translated after the split. The 765 level will be 255, I think. Let me make sure that it will be, yes, it will be 255, just calculated by the calculator over my mobile. So keep in mind, these numbers of the pre-split era are 900 monthly support, 860 safety level or stop loss level, and 765 our nearest weekly support. These are translated to the written numbers in front of you after the split. Keep in mind that the split does not affect the technical analysis over the time frames. The technical analysis will be the same regardless the split, and regardless the multiplying of the split, whether it is 3 to 1, 5 to 1, 20 to 1, it makes no difference. Splitting the stock does not affect the outlook of the technical analysis over the different time frames. That's why I calculated the monthly, weekly, and the stop loss levels into numbers of the split, so that you can keep in mind that the numbers after they change does not affect your vision and does not affect the outlook of the technical analysis. And what I want to say now, that over the short term we are expecting the stock to drop and to change its direction and to get into a downward impulsive wave, not because the split and not due to any effect from the split. It will be due to the market weakness and due to the selling pressure over the motor vehicles sector, and it will be from the bearishness of the indexes itself, not due to any effect from splitting the stock. So keep this in mind. If any bearishness took place within the stock, it is not due to the splitting of the stock. Instead, it is due to the general market effect and maybe some specific sector effects. That's it for now concerning Tesla. Thanks a lot for watching. Please feel free to like, share, and subscribe. See you soon.